What's happening, everybody? Welcome to another amazing, wonderful episode of Ryan in Real Estate. Thanks for joining in. Thanks for tuning in. Always appreciate it. Always stop for a second. Don't forget to subscribe if you haven't subscribed. We'd appreciate that. Also, check out some of the other videos we have. Great content that we hope to bring you and bring as much information as we can. If you're in the Houston area, if you're around the country, it doesn't matter. We'd love to hang out, talk with you as much as we can. All right, let's get into it. Question today is, are we still in a seller's market? You are hearing news from everywhere. Fox News, CNN, Business Insider, everybody, market crash, housing bubble. Here's the deal. We've gotten a little spoiled in the fact of where prices have gone in the last 2 years. And it really doesn't give us a good frame of reference from a wide standpoint, high level standpoint of where we actually are. If you really want to know where we're at, go ask your parents what they bought their house for in 1965. And just to help you out, let me pull up this graph. This is the actual average amount of a home all throughout our years, and for you also to see the sliding scale of how much home prices have actually increased across time. Decades I've done it here. 1965, average home price was $17,800. Could you imagine if you bought a house then? Well, maybe some of your parents or grandparents did, and they're living the dream now. 1980, $65,000. 2000, $180,000 average price. In 2010, we actually, even though it increased from 2000 to 2010, we had a major increase, which we've all known as that was the big housing bubble that happened in 2000, 2008, dropped prices, and they call that a mean difference, and it had that this big drop that you see. And that happened, and I'll get in a second why that happened, but it still over time went up 220,000, and then here we are in 2022, and it's gone in 12 years, 423,000 is the average home price in the US. Okay, so now why did that happen? What does that mean for us? Here's what it means, okay? Let's go back to 2007 and 2008, the housing bubble, all right? That happened because of the type of credit and loans that were being allowed to be written back then. And if you look at this graph, you can see over time the legitimacy of the type of loans that were being written. And if you look now, you can see back in 2007-8, which was the peak of how bad these loans were being written. They're basically letting anyone and their mother, no verification of income, no verification of employment. They're writing loans left and right like they're handing out money. And what happened? These people really couldn't afford the homes. They ended up foreclosing, which flushed a bunch of homes onto the market, which then created the bubble, which when that happens is when you have a huge amount of supply over increase the demand and rushes into a buyer's market. That's what happened. Is that going to happen again now? We've had this crazy increase. My answer is no, although there's a lot of people that maybe disagree with me, but here's what I'll tell you, and all of the different factors, I'll tell you why. Number one, if you look at home prices over the course from 1965, like I just showed you, we have continued to rise. Partly materials go up, inflation's gone up, things are worth more today than they were 50 years ago. Second reason is that, so we've seen the prices continue to drop, and the only time we saw a really strong drop down, prices increased, by the way, I said drop, but they increased. Only time we've seen a drop was when those type of loans were being written, and then you had this gigantic rush of homes onto the market, and you didn't have enough buyers to cover that up. But since then, it's been a pretty balanced market. Mostly the reason that I think this has happened is because it's simple economics. You look at supply and you look at demand. What we had in the last 2 years has been this crazy seller's market. And we've kind of gotten used to that. And now we're starting to see it change. We're seeing homes sit in the market a little bit longer. We're seeing not the high prices, the over asks, the waiving appraisals, they're not happening. And so that freaks us out and think, oh, there's going to be this bubble. And then at the same time, our stock market's starting to go down. Does that mean prices will drop? Maybe so. But does that mean that home prices will not increase over time? Because if you look at that graph that I showed you at the beginning, yes, over time it's continued to grow and grow and grow. But if you looked at it on a month scale or a 6-month scale, maybe there were some drops. But overall, long term, it's gone up and up. If you're an investor, maybe it's not the time to buy. Maybe you wait till it does a little drop and you pick it up there. But if you're thinking like I'm buying this house and I'm a homeowner and I'm gonna live, this is gonna be my residence, I totally think you're safe because, and still today, how do you measure if you're in a seller's market or buyer's market? It's called months of inventory. And what that means is that based on the amount of inventory we have currently on the market, the amount of homes we have on the market, and if we had put not one more home on the market, how long would it take us to sell all those homes off? And until you get above 6 months, you are still technically in a seller's market. Right now, I believe the last time I've looked at this, what we're seeing, we're still 1 to 2 months of inventory, which means we are way off from being in a buyer's market. Once we see more than 6 months of inventory sitting on the market, then that's probably when we would go into what is called a buyer's market. And even then doesn't necessarily mean homes are going to have a dramatic drop. It just means that they're probably going to start dropping in price. So all that to say, still, our supply is not greater than our demand. We have a much higher demand of people wanting to buy a home than we have inventory. And the reality is we're not building any homes faster. And it looks, according to all the economists, it looks like we're going to have 2 to 4 years of this particular seller's market, unless something else crazy happens. And if the interest rates continue to increase, yes, that's going to push some buyers out, but it's not going to push us automatically into a seller's market. And from my education, from this education that I'm getting, I just don't see that happening, because even right now we've had this kind of major shift that everybody's seen, and we've seen interest rates at 6.5%. We're still 1 to 2 months of inventory sitting on the market, meaning if we didn't build another house, in 1 to 2 months, all those homes will be gone, which puts us in a seller's market. So that's my answer for you. If you have any questions about it, I know a lot of people have very varied opinions on this. I would love to be diving into this even more with you. Put a comment in here, shoot me an email, give me a phone call. Would love to do that. Answer your question. Yes, we're still in the seller's market. We'll see you next time. Ryan Real Estate.